Hello, it's Adil Fazal, market analyst for CFDs.com, a leading spread betting and brokerage firm. Be sure to visit for the trading services and additional services at CFDs.com, www.cfds.com. In addition, you can also visit the educational site, which is www.cfds.education, to learn more. Okay, so a review of the FTSE 100 and an insight as to today's price action and exactly how the market stands for the next 24 hours. Okay, so yesterday's video I was calling for a rally, and we've certainly got a stellar rally, up 150 to 160 points, 2.6% to be precise. So as you can see here, whole of Europe is certainly green, US markets closed green, and Asian markets certainly led the rally from the outset. The Shanghai obviously up 0.5%, although it is actually off on holiday now. The Chinese markets are closed for Golden Week from the 1st to 7th of October. So again, that should provide some sort of calm and stability for European and US markets in order to potentially build a base and start to move higher. Okay, so we do have a lot of Chinese data out overnight, and obviously that will dictate the next move with regards to the FTSE, etc. And we'll certainly try and break everything down. Okay, the US market certainly closed very handsomely higher. As you can see, the industrial average Dow was up 230 points, the Nasdaq up almost 100, and the S&P certainly up quite stellar, up 35 handles. Okay, at 1920. Okay, so that's where the actual US, European and Asian markets closed. From the UK's perspective, it was Sainsburys that led the rally today, although Glencore certainly beat it in terms of the percentage move higher. So as you are well aware, the Chinese certainly dropped their sales tax on small vehicles by 50%, which in turn helped copper move higher, which in turn obviously helped commodities, and certainly led a rally or continued its rally in Glencore. And Sainsbury's obviously their results better than expected, which led and helped the rest of the sector. You also had the pharmaceutical sector certainly picking up as well, the food sector picking up as well. So overall it was broad-based rally, although the as you can see there, Fresnillo was certainly weak, Prigi Group was potentially weak as well. But generally speaking, it was broad-based rally, so the market's certainly embracing risk. Now, we also had weaker inflation numbers out of Europe, and that certainly helps in terms of the QE trade certainly being active again. Okay, and that certainly triggered it. Okay, now the actual Nikkei certainly pushed higher. We do have an unfilled gap here at 17,646, and then we have an unfilled gap there as well. So certainly two gaps to fill on the Nikkei. And that's something that we will certainly be observing overnight as the Nikkei or Japanese market certainly is open. Okay, the Shanghai, I have mentioned this a few times, and this is the argument that I utilized for the FTSE to certainly propel higher, which is the fact that we have a bull flag formation on the Shanghai, and this needs to be observed and watched very keenly. Okay. Now, going back to the FTSE 100, bringing up the economic data in terms of today, let's just bring this up and review the economic data first of all from a fundamental perspective. Nationwide house prices slightly better than expected, so obviously that certainly helps sterling. Overall, just neutral in terms of the impact economically speaking. The GDP number actually came in weaker than expected, so that was a concern. And that certainly knocked the FTSE, or certainly was intended to obviously inflict negative sentiment, and the business investment numbers came out worse than expected as well. The index of services came in line, GDP quarter on quarter came in line, total business investment obviously less than 50%, so again a negative read. So from my perspective, that certainly should have negative sentiment. But given the fact that the markets were rallying or potentially short squeezing higher, given the recent sell-off that we've experienced, it was more of a short squeeze as opposed to inherent strength. Now, we did have retail sales out of Europe as well that weren't exactly spectacular. And again, like I said, the unemployment rate in Europe was actually higher as well. So again, negative sentiment. But given the fact that, and also we had German retail sales in the morning missing as well. and unemployment obviously in Germany rising as well. But given the fact that the inflation numbers came out worse than expected, that certainly kept the QE trade alive as well, especially out of Italy. Okay, in terms of the US, mortgage applications worse. Mr. Dudley didn't really have much to say in terms of being market or having an impact on the market. The ADP employment numbers actually came in positive, so therefore more jobs, higher jobs, more jobs than expected. Basically, Chicago PMI came out worse than expected, and then Mr. Fed's Bullard and Yellen's speech not really having an impact on the markets as such. Okay, and like I said, it's the Chinese data overnight, and that will dictate market movements. Okay, so in terms of economic data, really it was all about the business investment and in terms of missing the mark. GDP quarter on quarter came in line, but year on year actually came out lower than expected. So it's certainly a negative argument or bearish argument there for the FTSE 100. It did dip at a low of 6030, which I had a short and I managed to get out before the market started to rally towards a close, towards a 6080 level on the FTSE itself. Okay, now no major impact in terms of economic data or no major reversal or movement. So let's see exactly what the technical chart or technical picture is currently stating, especially given the fact that, like I said, the Shanghai was higher and the news with regards to the sales tax obviously being dropped helped the auto sector revive itself. Okay, volatility index first of all, as you can see, a bearish engulfing candle today. The doji candle was the key yesterday, like I explained, hence the reason why I was bullish on the FTSE today, and that's exactly what transpired. The 60-minute chart on the FTSE 100, or should I say the volatility index, we are starting to come into potential support. If the volatility index comes into this region here around the 23, currently 24, then I'll start to get bearish on the FTSE itself. Okay, and that's certainly, and we did have a bottoming tail intraday, so again that was a early warning signal as well. Okay, and this is something that we are going to observe going forward on the FTSE 100. Okay, so certainly observe that area and when we do come into it. And again, it depends on how the Nikkei trades overnight and the Chinese data as well. So again, my analysis is always dependent upon those variables. Okay, now the weekly chart of the FTSE 100 is starting to improve now. As you can see here, you have a bottoming tail, which I've already highlighted once. We had another bottoming tail last week, and again, we seem to be having a bottoming tail again. Now, one could argue in terms of the FTSE that we had this bear flag formation play out here, bearish consolidation, the lower candle, again bearish consolidation. Obviously, we have flushed here. We flushed twice, and the market certainly is rejecting it thus far, and it's starting to push higher. Now, one of the reasons why that's the case is if we bring up the chart of oil, and this is a very important chart. Okay, along with copper as well. I mean, I can bring up a chart of copper and look at bring up a weekly chart or daily chart, should I say? And as you can see, we've certainly bounced off there, and that move was all today based on the Chinese, obviously Shanghai being higher, and adding the fact that we had this sales tax being scrapped on smaller vehicles in China, which obviously helps the auto sector. So, as we all know, global central banks, global economies all collude together, and they realize that that certainly is dampening economic sentiment, and a fall in European or US shares certainly hurts the Chinese markets as well. And given the fact that they are going into this Golden Week holiday, this Chinese holiday, then basically the central banks or the policymakers certainly want a bullish mood so that individuals go out and shop and purchase and keep the economy alive. And it's no surprise that they announced that sales tax being scrapped on smaller vehicles, and that obviously helped copper, which in turn obviously helped the automakers as well. I can bring up a chart of the FTSE automakers. Now, bear with me 1 second. Let's just see if I can bring this up. FTSE auto, 1 second. This, I think, will be a good chart to have. Autos and parts. Here we go. So, as you can see here, on the daily chart, we certainly have a thrust higher and move higher on the FTSE auto parts as well. Now, what I'll do is I'll save this chart because I think this chart is going to be very helpful going forward. Okay, right, so quite a stellar move there. Weekly chart, again, a bottoming tail, again, an argument there in terms of a potential pivot low. 60-minute chart, let's see, again, this is one of the reasons, I mean, again, why I was bullish on the FTSE. As you can see, a base was being built. and we certainly have broken above the resistance zone as well. So whether or not the Chinese data can certainly, or Chinese news with regards to scrapping the sales tax, can certainly help lift the sector out of turmoil, which in turn obviously will help the actual European and US equities as well. So this is going to be very interesting. Okay, now going back to the FTSE itself, I keep diverging. I did want to bring up a chart of oil. So here we go, oil. So if I just go to the daily chart, I've explained this yesterday as well. Now oil is starting to shape up into I've already explained it's a bull flag. We need a fundamental catalyst. Now one of the catalysts I think I've seen today and I've observed today is the Syrians, not the Syrians, the Russians authorizing force in Syria, and there was some rhetoric between the US and the Russians, okay, in terms of them moving out of the way, or basically not interfering with the Russian bombing of Syria in terms of the refugee crisis, etc., etc. So given the fact that the Russians have now got authorization and have started to bomb positions in Syria, and their intervention in Syria, that certainly will escalate any geopolitical tensions, which in turn will help the price of oil. Not only that, we also have the dollar index. So if I bring up the chart of the US dollar, DJFXCM, okay, you can see here we have put in a double top. A double top on a dollar obviously indicates that the dollar is now potentially going to move lower, and it'll move lower in the dollar generally means that obviously you are going to get inflation, i.e. commodities starting to move higher, okay, and therefore oil prices move higher. Copper, as you know, has hit double bottom, moved a double bottom. We can bring up a chart of gold, although it has been dented today due to the risk on scenario of the markets, but in general, in terms of it being inverse to the dollar itself, you are generally seeing a potential inverted head and shoulders, which I've already explained, and you are looking at holding this right shoulder. Obviously it sold off today because of the risk on nature of the market. So, and also given the fact that you had weaker inflation out of the European markets, and that obviously isn't helping gold in terms of it being an inflation hedge. Okay, so again, that certainly is a factor again for the FTSE 100. Now bringing up the mining sector, again you can see here on a daily chart we did have this thrust higher. We are in a downtrend, so that can't be ignored. That certainly needs to be respected, but as I explained yesterday, the monthly charts are showing you a double bottom on the mining sector as well. So if you have got copper confirming double bottom and you have oil obviously in this bull flag formation, then the bias or argument is certainly turning towards the upside in terms of commodities, FTSE in general as well. Now the oil and gas sector as well, bring this up for you, bring up a daily chart first of all, and as you can see we're bouncing off and holding this double bottom. Once we negate this bearish candle on the 28th, then we can certainly start to push higher considerably, and as you all know with regards to the old chart that I've explained, it certainly is in a bull flag formation and therefore it remains bullish. Okay, right, the FTSE, going back to the FTSE 100 now on the weekly chart, like I explained, a bottoming tail. So if you take into account copper and oil, then one would argue that you are going to move higher. The daily chart on the FTSE 100, we are in this bearish channel. We are knocking on the upper channel. Now a chart that I've already shared, you need to go to the educational site, www.cfds for the educational site, and if you go to the educational site, you will notice that I have uploaded my chart. So if I just drag this across and share this with you, as you can see here, I have uploaded a chart of Russell. So I would encourage you to certainly add this to your favorites, www.cfds.education. Okay, and you will certainly see the chart of Russell. If I can just maximize this chart here, you'll see that there's an inverted head and shoulders formation on Russell, on the Russell 2000. So if there's an inverted head and shoulders on Russell 2000, that's certainly bullish for the S&P 500 and US stocks, which in turn obviously is bullish for the FTSE 100. So if you bear that in mind, and if that's the fact, and if that's the case, and we can see the dollar obviously hitting resistance, given the fact that you've got chaos in China and the volatility in biotechs now as well, the Fed is certainly in between a rock and a hard place, and therefore will not be able to, well, the charts are certainly showing us that the Fed will not be able to raise rates, where therefore the dollar will start to collapse as they push back expectations, and that obviously in turn will help commodities and help the FTSE 100 to certainly break out this channel. So again, all those factors certainly need to be taken into consideration. Okay, so the 60-minute chart of the FTSE 100, we certainly are knocking on the door of 75% retracement, as I explained in this chart yesterday. If you look at yesterday's YouTube video, I was expecting a breakout of this channel, and then obviously the markets are thrust higher given the bottoming tails that we witnessed. As you can see, this diagonal trend line certainly held support very well, and the market reversed quite powerfully, as we can observe today. Now we are into that fib 75%, so 6060 zone to 6070 zone remains key. If you break through that, then obviously we short squeeze higher back up to 6120. If you break through there, then your 6160 level is going to be absolutely key. If the market holds a 6060 and the Asian markets are weak, given the fact that Chinese data and a lot of economic data are out in the next few hours, then obviously the markets start to potentially push lower. If commodities start to sell off and there is any geopolitical or socio-economic event that causes a risk-off scenario, then obviously we start to thrust back down and test that 5960, 5900, 5880 level again. Okay, that certainly is a situation on the 60-minute chart. The 10-minute chart of the FTSE 100, we have this intraday double top at 6050. So again, if we can break above that, then you certainly are in the bull camp, and we certainly are. We have a non-stop ride up to 6120. A 5-minute chart, see if we can observe anything there. Nothing really, given the fact that it's just that double top 6050 resistance. If we can gap above that, given the economic data overnight, then we'll see exactly where we stand. But 6100 to 6120 key resistance zone next on the FTSE 100. We break through there, then obviously 6160, and then we'll have to assess as to where the markets are going at that juncture. Overall, in terms of the other sectors, I mean, we can certainly observe the Aussie. The Aussie certainly is under a lot of pressure at present due to the IMF downgrading the situation there in terms of its economy, and certainly some dovish comments basically have sent the Aussie down. So the Aussie certainly is under the cosh, so I'm going to ignore the Aussie for now because of the fundamental nature of it. The daily chart of the Kiwi is certainly knocking on that resistance door, and we could potentially see a thrust or a potential move higher. Okay, the 4-hour chart again is into that zone, so again this is going to be very, very interesting, especially given the fact that we've built a base on the Kiwi. Even though it is very, in terms of the RBNZ is and remains dovish in terms of its last interest rate cut, this certainly is more of a dollar weakness potential move. Okay, and that needs to be observed and watched very carefully in terms of observing where the FTSE 100 goes next as well. Now, the FTSE European Daily, again, we have this bullish continuation pattern, even though we are below previous resistance equals support. We certainly are knocking on there. If we can break back above it, then obviously the shorts get squeezed out and the FTSE certainly starts to propel higher. Again, with the FTSE 250, bullish engulfing candles, so certainly can only be good news. The bulls certainly are back, okay, and showing immense strength. If we can continue on that, then that's bullish for the FTSE 100 itself. FTSE Europe top 100, again, bullish continuation pattern.